Afternoon. What we're going to do is we're going to take a look at the Nasdaq, Dow and the S&P, because obviously those are the ones that are in the forefront of everybody's mind of what's happened yesterday. Yes, but look, and this is what is very important. When I spoke last week about the Nasdaq topping out, that is exactly what it did. You know, we're on a daily chart at the moment, but quite clearly you can see that double top formation that we made back in July, August, and then again last week, you know, right at the beginning of October. So from then on, you can see that the Nasdaq really couldn't make any headway to the top side. And we are below 3 really good moving averages. Now, I heard a little bit of a thing on CNBC last night that we've broken through the 200-day moving average. No, we haven't. We have not broken it yet. I am not saying we're not going to break it. I am saying that we have not broken it yet. The 200-day moving average is coming in at 70.35. We've got that 69.34, which is the 50% Fibonacci level. You can see all the indicators fell out of bed. Not yesterday. You've got to go back in time. And really, if you looked and you looked closely, which I did, which I told you about, it was in the beginning of October, not that long ago, when these started to turn. And as I said, it was difficult with the Dow making new highs, but the Nasdaq is one that is very underrated and really should be looked at on a much closer basis. So now I've showed you the daily chart, I'm going to take you out to the weekly. Now with the weekly, you can see that the weekly averages are not crossing. That really doesn't matter a jot in these markets. Moving averages are to be used purely as support and or resistance levels. We don't use the crossover anymore. We take notice of it, but we don't really use it. Like when it crossed here, it didn't do anything. It didn't go down. Our indicators didn't show that we were going to go down. In fact, they showed we were going to go up. But look what I kept saying. We were diverging. So as the price was going higher, these indicators was not. They were actually looking flat to lower. And when we made the first top on the weekly Nasdaq, this is when they turned. So all this little bit here really was the market's indecision. And last week, it tried it again, it couldn't break it, and the rest is history. And it's only Thursday, and really it's only the last 2 days that we've seen dire death and destruction in the market. But if you look, and you've got to look at these longer term indicators, you really have to. Okay, the 55 days coming in at 68.49, the 23.6 fib is coming in at 68.07. Now, we've been through this in this area here at the beginning of the year. Okay, we've been through this, so we are still in an uptrend. I know it doesn't look like it, but from 2016, and then when I show you the monthly in a minute, you'll see exactly what I mean. Markets correct. They do correct. And what they do is they tell you when they're going to do it. If you don't look and you don't listen, then you're going to miss it. And it's a bit like Johnny come lately wanting to sell it now. We don't normally catch, well, we did in the S&P, yes, but we don't normally catch the first bit of a move. So you sort of, you're becoming aware. At this point, you are aware of that level over there. These don't change whether you look at it on a monthly, daily, 15-minute if you really have to. But whatever time frame you're looking at, the longer the time frame is, the clearer the longer term picture is, the quicker the move will be. Okay, so where do we go from here? Right, well, we've gone past the previous Nasdaq high, which was at 71.86. We've done that. We've got a little bit of support round about this level here, which is the 68.50 area, but really this is the level we're looking for this week. Now markets in an uptrend, in a strong uptrend, will only retrace 23.6. They can, in a very strong uptrend, also retrace 38.2, which would take the NAS down towards the yearly lows. And that's what they're aiming for. Please do believe me. They do like a yearly low. And we are in October, mid-October, and markets do this. It's not strange. It's not unusual. This is what they do. So it's heading for the yearly low, but it's got a long way to go before it reaches that. And there are criteria in place. You are going to see buyers down at 68.07, 68.49. You are going to see them coming in, whether they're profit taking or fresh buyers. They're going to be there. It's whether or not the market has the momentum and the will and the psychology to go down and test those yearly lows. Personally, I think it's going to. And even if it does, it only takes us down to 38.2, well within a bullish market correction. These bull market bear corrections are really painful. I know this. We lived through it January and February. But corrections are all they are at the moment. I'll put you onto the monthly chart very, very briefly. Now, this monthly chart gives you a whole different spec on the thing. What I've done is I've actually, I'm going to move those. I don't know why they moved, but they did. What I've done is put the monthly chart up from where we started the bull run in 2009. This is to give you an idea of what we have to handle. We've seen that 2016 bull market correction. Up we went. You know, this was around the beginning of the year, and up we've gone again. This is not a good month. And if the end of the month we close down below that moving average, which is at 70.67, if we close below that, we are in deep trouble with the Nasdaq and all stock markets. You can see where the divergence came on the stochastics. You can see where the divergence came on the RSI, on the monthlies. Now, I know there are a lot of you out there that don't actually look at these longer term charts, but it's my job to point them out to you, because yes, it would be boring trading off of a monthly, but you can't trade on a shorter term chart without actually knowing what the longer term time frames are doing. You're going to get caught out. You're going to get hurt. Hopefully this has put you on the right road for the Nasdaq, and I will catch you again. Thank you. Bye.